All right. Welcome, everybody. I know you all got an email from our office last Friday, kind of late, from Tara announcing a change. And so purpose of the webinar is to just go through the details of that and then also be available for a Q&A. So this is only designed for clients. And so what I'd like to do is try to do the Q&A live instead of typing questions. I'd like to hear your voice. I don't think we have video turned on, so I think it's just going to be, we're just going to kind of turn on the feature to basically, you can ask the question live. So if you look at, so Tara gave me some housekeeping items, so let me go through that real quick. So we're going to record the webinar. So we're going to send this out to clients who are not able to attend. The Q&A is going to be at the end of the presentation. It's pretty short, so it's not going to be super lengthy today. It's mainly I wanted to just give you guys what's going on and then also just be here and available to answer questions. I did have some clients send in some pre-questions, so I can go through those as well. To ask a question out loud, meaning for you to participate and so we can hear your voice, you can use the raise the hand tool. I don't see that on my end, so my guess is it's there. I might have Tara kind of look into that. So I don't know if I can see, oh, major echo. Okay. So thanks, Bob. Okay, is that better? Is the echo down? Is it better?
You've been good for us.
You've been, okay. All right. So, okay. So we're just having some technical difficulties. We're working through it though, so it's good. All right. So I think there's a raise a hand tool at the bottom of the screen in the toolbar. And then once you raise your hand, you'll be in a queue, and then I'll go through and I'll just, Tara will unmute you, and then we can have you ask the question. So we're only going to unmute one person at a time because we have about 40 participants on the call today. And just want to make sure that, and once you ask your questions, we'll put you back on mute. So if you have a follow-up question, you can raise your hand again. If you want to type your questions, I will go through the Q&A option as well to just go through that live. So, all right. So welcome everybody. So I'm supposed to do that at the beginning. So glad you guys can all join me. I know it's August. Can't believe how much time has gone by. So it feels like, I guess we're 5 months into all of this. And, but today's kind of an exciting announcement for us. And so let me go ahead and share the screen and we'll get started. So, okay. Okay, so obviously on the email announcement, so one of the things I just want to recognize, we sent an email out. The intention of the email was just to make you all aware of the webinar. I think unfortunately it came across a little bit that, we were just trying to let you all know through this mass medium that we're making a change to how our firm is being managed. And so we didn't mean to be cavalier about it. We didn't mean to send it late on a Friday and not give you some background information, but it was really designed to hopefully get you excited to come to this meeting. Maybe in hindsight, we'll just say, hey, we have a surprise, join us. So I apologize for any of you that felt like that email was weird. That was not our intention. We just wanted to get you as many as we can to participate in our webinar today. So, and if you have any more feedback, one of the things that many of you even on this call have been great about giving us feedback. If you have feedback for how we could have handled things better, have feedback for us, anytime we want feedback from our clients. And so, feel free to ask a question today or even email me offline. So basically our webinar today is to talk about a change that we made. So the term registered investment advisor, or short, it's RIA. Basically, this is the change that we're making internally. Not going to be, we believe as a client, you're not going to see a big impact, but we do want to go through what that means. And so and I'll go through some of the weeds. And so one of the things that I'm going to kind of move on. So one of the things that I saw some people on this call that have been clients for almost 20 years. So I've been doing this now 23 years. You've all seen our team grow, expand. One of the things that I'm truly committed to is, we want to make a bigger impact on our community. We want to help more people's lives. And, the way for us to do that is to grow as a team, because I can't be in all places and I can't be everywhere. And frankly, there's a lot of stuff I'm not that great at. So I got to build a team around to make sure we can serve our clients to the best of our ability. I'm super excited to look at this team today. We're a team of 10, and we're likely going to be hiring someone new in the next few weeks. So I look at our team is amazing. And, I know many of you, know all these faces, familiar faces. And the thing that when we look at this transition we're making as a firm, the team's not changing. If anything, it's going to grow. And just to, hopefully you guys realize is that, we're building a team so that we can serve you. We can serve multiple generations. We're truly building a team that can exist without me, that can exist, in perpetuity. That is really the goal, because we think that the type of advice we're giving is second to none. Hopefully you feel that way as well. We continue to try to innovate. We continue to be the best that we can, continue to get better. And so today it is really kind of a celebration. We've been growing as a firm. We manage about 350 million for about 200 households. And, that started one household at a time. And so it's exciting. So I want to get into that and what this means, because, sometimes when we go through a transition, is that really internal? Is it about us or is it about you? And it's a combination of both. And so again, I'm going to kind of share. So these are the things we're going to highlight. Why are we making the change? What will stay the same? What's the impact on our clients? What's the impact on our company, Vance Wealth? And then what needs to be done to change? So that's going to really be the breakdown of today's conversation. So I've tried to put I don't think these are in order of importance, but really just kind of in order of just why are we making the change? So most of you should know that we as a firm, so Vance Wealth has been with Raymond James since 2003. So I was 28 years old, came over to Raymond James, been super happy with Raymond James ever since, still happy with Raymond James. We have always been independent. And for all of our relationships, we charge our clients an advisory fee to advise them on their accounts. And we have been doing this under the umbrella of Raymond James Registered Investment Advisor, so RIA. We've been doing it under their umbrella. We now are at a size where we've created our own, and we're still going to do all of our business through Raymond James, but it just gives us more flexibility, more control. It allows us to grow as a firm. And if you look at major investment firms out there, most of them are their own independent RIA. So it was kind of a natural transition for us to go to. So again, we were part of the independent channel. We were being supervised by Raymond James and FINRA, which is our regulatory agency. So as an RIA, we're essentially responsible for internal supervision, and then we get audited by the SEC. So the SEC is the Securities and Exchange Commission. That is the regulatory body for RIA. So again, this is a lot of weeds internally. We do have an outside compliance firm. We have our own E&O insurance. All of the things that we need to do to operate a business, we're putting in place. But essentially, instead of relying on Raymond James to do a lot of this and paying Raymond James to do a lot of that, we are managing this internally with our growing team. And then we pay for that separately as kind of an a la carte, as part of our cost of our operating. So that's what we view as greater independence. Now, we're years away from this, but if we wanted to change firms, we could. We are not changing firms though. So that's the clear thing. We are super happy with Raymond James, but we would have the ability to have clients' assets held elsewhere. We're not going to do that. We're staying with Raymond James. So I'm going to make that clear, because I know in a lot of the emails that I was getting from several of you, there was that concern is what's going to happen with Raymond James. So I will go through that today. So fiduciary standard. So fiduciary standard is basically, we have to act in the best interest of our clients. I have been a certified financial planner for, I can't even remember how long it's been now. I think almost 15 years. That is a requirement of a certified financial planner to have the fiduciary standard. So we've always been living up to a fiduciary standard. As an RIA, it's a requirement. When we were under the traditional Raymond James broker model or brokerage model, that was not a requirement. We just held ourselves to a higher standard. As an RIA, that is now a requirement. So it's not new for how we're running our practice, but nevertheless an enhancement and a good, I guess a good adjustment from an RIA perspective. So fees. So one of the reasons why we're making this change is that over the years, since I've been at Raymond James, fees have been coming down for clients in terms of transaction fees. It's becoming a much more friendly environment. With a lot of the regulatory challenges that Wall Street's dealing with, fees were starting to go back up. And so by us moving to this model, we eliminate a lot of those Raymond James expenses. It allows us to keep our fee structure the same, because that's something we were struggling with internally, is as our expenses to run our branch were going up, Were we going to pass that on to our client? Were we going to take that? How are we going to manage that? And we didn't want to pass it on to our client. We feel like how we charge you is very fair, but we wanted to make sure that we could continue to operate. So the cost savings that we will have internally, we're going to be putting that to continue to grow our team, to expand our team, to make sure your client experience is at the highest level, make sure our advisors are getting paid fair, making sure the advice that we're giving you is second to none. So these are all things that we're doing as a business decision, but again, your fee structure is staying the same. So there is a couple enhancements that I will mention, but the rate you pay our firm will not change. Thought leadership. One of the hardest things when you have an investment firm like ours is we create a lot of content. We've done a lot of webinars. We do social media posts. We try to get out there in the community because we want to be a thought leader. We do a lot of research. We try to think about things a little bit differently. And by having our own RIA, it allows us a lot more flexibility because we're doing it under Vance Wealth, not under Raymond James. And so it allows us to have more content around webinars, videos, just basically give us a lot more flexibility. So again, for us, that's kind of a benefit. So one of the things I struggled with putting together these slides, these all feel like me, meaning these all feel like this is just benefiting us. But when we truly look at all of these four things, this makes us a stronger firm, a better firm, a more independent firm, and a firm that's going to be better designed to help you going forward, to help your family going forward. And so while these seem like they're all inward facing, it's going to allow us to do our job even more effectively. So what's going to stay the same for you, right? So that is actually the most important part of today, is what's going to stay the same. We are super excited about this change, but the things that are going to stay the same is all the stuff that you've become accustomed to. So Raymond James is going to remain as custodian. So that means that your online access is going to be the same. If you're accessing Raymond James through your mobile phone, it'll be the same. If you're using the vault system and where you access online statements, the same. All your bank profiles, direct deposits, money moving to your bank and into Raymond James, those remain the same. The performance reporting, the history, all of the data we have on how your accounts have done going back to, since we've been at Raymond James, they remain intact. The financial planning system, GPM, goal planning and monitoring, that remains the same. All the data we have in there remains intact. And then fees, no changes to the advisory fees. So there's not an adjustment to you. The added benefit is now in this new model, any trades on stocks or ETFs, there's zero cost. So prior, I believe the cost was around $10. That's now going to zero. So trading, we're not super active with trading. So trading is not a big part of it, some of the processing fees or some of the costs that you were paying Raymond James, but we're excited about that the stock and any stock and ETF trades are now at zero. Okay, so impact on Vance Wealth. So, kind of a little bit of this is like the timing for us. So we're expanding our offices. So I know we haven't seen you in person, but some of the things that have been changing since March, we are in Santa Clarita. We have a 2,500 square foot condo that we have our employees in. There was an opportunity about 8 months ago. The building next door that we share a wall with was up for sale. It was the original owner, had been here 10 years, decided to retire and move out of state. So we bought the building. So we did tenant improvements to basically be able to expand in that. So we were at capacity with our current space as of when we hired Patty. And so we purchased the adjacent condo, and we're really excited because we think with this move, we're probably going to be hiring about 3 new people over the next 18 months. So administrative, financial advisor, and operations specialist. And so a lot of the common theme here is we want to continue to grow because we feel like the growth allows us to serve more people, to help more people. Products and advice. And so we're going to continue to deliver the advice on a fee basis. That's not going to change. One thing that does change in our world is that there is no like variable business or commission business. And so sometimes for any of you that we open like 529 plans, there was some commissions that were paid to our office. Those will change to fee-based accounts. We won't be able to do like variable annuity contracts anymore because those are regulated by FINRA. So we won't be able to do any new business there. So there are some restrictions, but we're so heavily modeled based on the fee advice that we're giving and building diversified portfolios that we really don't think it's a big deal. We can do some fixed insurance business if we want, but our advice model, 99% of it there is no change, and so we're losing no flexibility. And then supervision. So we're going to be audited instead of by FINRA, we're being audited by the SEC. And again, I know this is all internal facing, but it's kind of the nuances of what goes into running our business. And we're hiring an external compliance firm to handle a lot of this instead of Raymond James doing this. And so what needs to be done to make the change? And so new paperwork. So there's going to be kind of two batches of new paperwork. We have paperwork that we're going to fill out at Raymond James, which is basically going to transfer. So there's a form 1221, which is the transfer change form to an independent RIA. So your accounts are going to just physically going to be the same account number, and they're just going to change from one department at Raymond James to the independent RIA side. So it's an internal move. Then we also have to fill out an 1866, an authorization to retain client information. Because we're moving from one branch of Raymond James to an independent investment advisor division, we have to then have you sign an authorization to retain client information. So when's this all going to start? So dealing with 200 households and trying to get this all done by October 1st. We think this is going to take about 6 weeks. We're going to start this process starting tomorrow. I don't know all the nuances of the timing. I don't know if we're going alphabetical. Robin and Tara internally are gonna head up that. And so just to know, this paperwork for the majority of you will be coming via DocuSign. That is our preferred. And we're going to fill out all the paperwork. It's just going to take a signature, and that's going to probably take us about 6 weeks to get that in. And then, so that's the Raymond James paperwork. That's just to make sure it moves over to the proper department internally. And then our RIA, which is a new advisory agreement, which basically just kind of reaffirms how we charge your accounts. It's going to stay the same. And the when in the how. So we aren't going to be able to start this till September 10th. So we'll have about a month. So just know these are going to come in batches. What we want to make sure is all the Raymond James stuff is in order, and then we'll get the advisory agreements in next. So it's not going to impact anything that's happening in the third quarter, because we're essentially moving on October 2nd, which is which is the beginning of the fourth quarter. So those are the changes that are going to need to be made. These are just a little bit of the samples of the statement. So we'll fill in your account number, the registration, meaning the title, how it's going to read, and it's going from RJFS to IAD under the Vance code. So, and then we'll fill in this authorization to retain client information. So not super exciting stuff, but this is the paperwork you're going to be getting. We're going to do it all through DocuSign. If you know you're not going to be able to do that through your phone, you can let us know ahead of time, and we can make sure we get out something so you can sign by paper. But it should be pretty simple to just do it through your phone or through your computer. So the official date of our transition is going to be October 2nd. The only, I guess we could call it a hiccup in any of this, is there's going to be a blackout period. So because we're moving internally at Raymond James, as a client, you might lose online access to your accounts for a few days. Maybe a day, maybe 2 days. So just be warned, that'll be right around October 2nd in that time frame. As an office, we might lose access for up to 5 days. And so we can always call in if we have anything that's an urgent item. And so because we might lose access just because of the transition over, we want to get prepared for that. So any of you that are taking money out of your accounts on a monthly basis, what we're actually going to do is that, and if you see here the bottom bullet point, if you are set to receive an auto deposit, meaning from Raymond James to your bank between October 1st and October 15th, we're going to move up those transfers up to September 25th. So what will happen is we'll get that money out to you a little bit early. And that way, when we're in a blackout period, there's no surprises. We just don't want to have delays where we can't get access to information. So we're trying to be thorough and think through things that might come up. And so we're going to go through this process and look through everyone October 1st to the 15th. Any money movement, we're going to move up to the 25th. So just be aware, you're going to get 2 deposits that'll come in September, and then you'll resume back on your normal schedule. So that's just, again, some of the transition things. So that's it. Now we can go into some questions. I'm not sure what we have here. I'm going to go ahead and stop sharing. And I wonder if we have any raised hands. Tara, I can't see raised hands on my end. I don't know if there is any raised hands. So if we don't have any raised hands, I do have a couple of questions ahead of time. The hand tool is on the bottom of the screen under your image. Okay.
There are raised hands.
There are?
Yes.
Okay. Can you, oh, there they are. Are you gonna, yeah, you're gonna start from the top? Okay. Tara just gave me the update that there are raised hands and that she'll start from the top. And then I have some other questions that people ask that I'll kind of add in as well.
So my turn. I'd like to know what is going to happen to any presence in Pasadena.
Oh, good question. So thank you, Roberta. Hope you're doing well.
Thank you.
So our office in Pasadena, it's basically been vacant. As many of you know, we have a small office there, which we can do work in, and then we have the conference room. Because of COVID, they have actually closed down because it was a community conference room. So they closed that down, so we haven't had access. So we plan to maintain our Pasadena office going forward. You know, we're super excited to get back face-to-face, but we also know that, you know, we tend to have a retired clientele. I mean, our clientele tends to be kind of 50 to 90. And so, you know, we've been pretty cautious about having face-to-face meetings just to be careful, but our Pasadena office is going to continue to function. I don't know if we're going to have any meetings between now and year end. We are willing to meet in person. We haven't been scheduling Pasadena, so we're hoping Zoom is a good format for this. You know, I was a little skeptical of doing meetings via Zoom, but it's actually been quite efficient. So Pasadena is still going to exist. So when we get back to some normalcy, maybe next year, we plan to resume back to having our, you know, full Thursdays in Pasadena where Jared and I and Tyler come out and have meetings with clients.
Great.
So that's a good question. Thank you. All right, looks like we have Tamara up next, I think.
Can you hear me?
I can.
Oh, okay. You know, I have an annuity through Transamerica with you. Are you still going to be managing those kinds of annuities or being able to access information from them? Yeah,
good question. So, great question, Tamara. The annuities are, I don't want to say tricky, but we are going to be able to advise on them. We have to kind of change the way we do it. So it's not going to, your annuities will still exist. We'll still be able to provide advice and you know, help you to manage those, make sure income is coming in. It's going to be a little different. So I didn't prepare that as part of the call because we don't have a lot of annuities that we work with, but those of you that do, you're going to get actually another package on some of the changes. So those of you that have annuities, we're going to do specific outreach to talk to you about how that's going to impact you. But we will have access to the information. We're not leaving those behind, but it's just going to be a little bit of a different dynamic because of the change with our licensing.
Okay.
Thank you. Good question. Looks like maybe Diane.
Yeah. Hi, John.
Hi.
My question has to do with this presentation. There was a lot of information just being, you know, you were talking quite fast. And I was wondering if you're going to have something like in writing, or is this the only venue that we have to kind of go back and try to wrap our minds around?
You know, so that's a great question. So Jared is kind of working on like an internal, I guess like a one-pager that kind of goes through some of the facts around these. This is what's changing. This is what's not changing. So, so that is something we're trying to work on from a documentation perspective. But I don't know if there's even significant changes on the client end. And I think you had sent some questions. So we are going to put some more stuff in writing so that you understand that, because we're going to start sending packages out. We want everyone to feel comfortable, but let me go through some questions, because I think Diane, you may have sent these in via email. So let me go through those so that I can maybe address those, and maybe it'll ease some of your concern. So Tara, I have 4 questions that I'm just going to kind of read through, and then you can pull whoever's next in the queue. And then Diane, if I didn't answer your question, just hop back on and we'll go through that again.
Sounds good.
Okay, so one of the questions said, we had a good friend burned by an independent advisor. How will advisor accountability change with your relationship to Raymond James? So great question. So being so Raymond James won't have the same responsibility of supervising our activity now, but basically happens, again, I apologize because I know we're getting into the nuances of how the business is run, but we will maintain our own errors and omission assurance. It's my business, so I'm supervising everybody. We have an outside compliance firm that we have monthly calls with, We have the internal technology that's monitoring trades, that's monitoring social media posts, that's monitoring emails, that's monitoring activity at our branch. Those are all requirements of the SEC. So we're going from a FINRA Raymond James dynamic to SEC. So we're certainly not off the hook with, complying with all the regulatory bodies and making sure we're doing the right things for our clients. But at the end of the day, when you start thinking about the biggest thing that's not going to change is your money is still at Raymond James. When we buy and sell a security, it happens at Raymond James. And so that's where a lot of things go sideways, is when people's money aren't being custodied by a reputable firm. And so your money, that's not going to change. And so, yes, we're stepping up our level of independence and maybe a little bit more autonomy, but your money is still being safe kept with Raymond James. When we move money, we have to follow the same protocol. So it doesn't alleviate some of the compliance burden. It's just kind of shifting from one regulatory body to another. So hopefully I answered that question, but if there's more on that, I'm happy to go. So the next one says, are you still a member of FINRA? So FINRA is the Financial Regulatory Association. So we are not going to be a member of FINRA. We'll be under the jurisdiction of the SEC, which most people would argue the SEC is going to be a little bit of a tougher audit. But our firm does things so by the book. And so us being staying in compliance, because we already hold ourselves to a fiduciary standard, is going to be pretty simple. So we don't look at that as a bad thing. We welcome that, and we want to continue to get better and make sure we're following all the guidelines and all the necessary things. Number 3, what will this new role mean in terms of fiduciary responsibility? So I think I covered that, but we have the same fiduciary responsibility. I guess under the RA, it's a requirement. But again, because I've been a certified financial planner, CFP practitioner for 15 years, that was a requirement already. So we were already abiding by those fiduciary standards. Will any of our investments have to be sold for this change to transpire? Absolutely not. We lose no flexibility with our investment strategies. We continue to be able to invest in a diversified strategy of mutual funds, ETFs, stocks. We don't lose any flexibility there. Okay, so those are 4 really good questions. It looks like I have a couple other questions. So Tara, if you want to cue that up. It looks like I have Lynn Rafak. I think it was Lynn. I think she's muted.
Hi, John.
Right. I got you, Lynn.
I didn't expect that. This is not about the changes you're making. Is it okay to ask a question off topic here?
Sure. It depends. If we're going into the election, then I'm out. But if it's other topics, then I can do it.
Really not quite. I'm just wondering, the stock market in general seems to be staying up. Why is that, given that the economy is in such disruption?
So great question. I don't know if you've been tuning into our other webinars that we've been doing, because we've been covering a lot of economic issues, and we're actually doing one, I think it's next Tuesday. So I can go a little bit more into that, but just real quickly, the stock market and the economy can become disconnected from time to time. The stock market tries to be a forward-looking indicator. So if you remember, the stock market went down before a recession started, and it usually goes up before a recession ends. And so it's kind of following the typical pattern of a market recovery. It just happened so severely, right? We saw such a sharp sell-off and such a quick recovery that kind of shocked everyone. But in our opinion, the big driver of what's driving the stock market is the Federal Reserve and the government have pumped in trillions of dollars in unemployment benefits and stimulus, and that money is finding its way into investments. People are buying real estate, people are buying stocks. And whenever you have a surge of money, cash, it drives prices higher, right? Because if there's more buyers than sellers, it pushes prices higher. So we think it's a phenomenon of the Fed and the government really pumping a lot of money in the system. And it's not necessarily great long-term, it's good right now. So those are things that we're continuing to manage for. But great question. I think that we're going to do our kind of our monthly webinar on the economy. And so, make sure you come back for those, because we'll definitely get into the weeds a little bit more on that.
Thank you.
You're welcome. All right, next question. George, it looks like.
Yes, hi John, how are you?
Hey George, doing great.
So I think you may have sort of already answered this, but being an independent now, are you going to have access to other avenues for investments, or is everything going to stay within the Raymond James catalog, if you will?
Yeah, so great question. So by being an independent registered investment advisor, it will allow us to do what's called multiple custody, which means we could establish a relationship where some clients have accounts at Raymond James only, some clients have accounts at Fidelity, some clients have accounts at Charles Schwab. So it allows us to open up flexibility. So for example, if there was an investment that we needed to make and it wasn't accessible at Raymond James, if we had an affiliation with Schwab and we could do it there, it could open up an investment opportunity. We're not seeing a ton of restrictions at Raymond James that would cause us to make that jump, but we do think as we're a firm that's growing, that we want to be open to that possibility of there might be a better technology program, better trading at a different firm. And so by going independent, we might opt to say, you know what, we want to have some clients on a different platform. Clearly, if we ever made that decision, that would be on a case-by-case, client-by-client decision. So again, we have no intention to leave the Raymond James platform, but it would open up more opportunity as we grow. And we think that flexibility is going to come in handy because we also don't know. You know, we've seen over the years, we've seen firms merge, right? So what if Raymond James gets bought by Wells Fargo? Do I want to be affiliated with Wells Fargo? Probably not, right? So not knocking Wells Fargo, but you know, that's the thing. What if Raymond James got bought by B of A? Would I want my client assets with B of A? Probably not. So this just gives us some greater flexibility to kind of control our own destiny, make sure we are always focusing on our clients. And so that as things unfold with businesses, it gives us true independence.
Great. So you'll kind of study it on a case-by-case basis, client-by-client basis, and then you'll advise us on what you recommend that we do going forward.
Yeah, absolutely. I would say that just because of transition and what it takes to make this move to get all the client accounts, and get new paperwork and all that, we're definitely not entertaining this probably for the next 18 months, but it'll be part of our strategic plan where we really evaluate capabilities. I didn't even go out to Fidelity and Schwab. I mean, they'll woo you, they'll pay you fees to move over. We didn't even go through that transition because it's really not about that. But when the time is right, we'll go out there and really assess their capabilities and really do a comparison with Raymond James and other firms. And if we think that there's a value in maybe making some changes, that we'll of course, we're going to entertain that, because if we can serve our clients better, then we'll make that change. But it's not part of this transition. And I don't want clients to see the writing on the wall that we're somehow unhappy with Raymond James. We are absolutely not. I'm super happy with the firm that I selected, 18 years ago. But it would be silly for us not to go out there and look to see trading platforms, technology. Are there things that we can do to enhance the experience for our clients? And so that's an open item, but it's really not a priority in the next 18 months because it would be, I think, a little bit too disruptive to make those changes at the same time.
Sure, makes sense. Thank you for taking my question.
Yeah, of course. Thank you for the question. All right. Who is in the queue? Can't tell if it's a phone number that's coming in. Did anybody get unmuted? Let me see here who's coming in next. Virginia? Jenny? I see her muted right now, so. Okay, Jenny, are you on? It looks like you're unmuted. I don't know if you can hear me. I cannot hear you. Okay, while we check, I guess, technical difficulty, there was a question that was typed in by Val. It says, how will this affect foundations? I'm not sure if you're just referring to like a foundation account that we're overseeing, but it should have no impact on a foundation. We do have clients where they've set up like donor advised funds at Raymond James. That's not going to change. So, it's really going to have no significant impact on any client or any client accounts. So this will not impact foundations. All right, so it looks like I got Ginny and David in the queue. So I don't know if we can maybe try Ginny again, see if we can get her audio working. Jenny, can you hear me? All right, it looks like we can't get any live feed. Can we go over to David and maybe we can circle back and see? All right, we're gonna unmute. Let's see here.
I can't go to David because of his version of Zoom. It won't let me.
Oh, really? Okay. Hey, David, it looks like because of your version of Zoom, it won't let us unmute you. I don't know why. If you want to type in a Q&A on there, then let's do that. And then, and don't be shy. If you guys have any other questions you want to put in, this was really designed to be informal, designed to, I'd much rather do this in person, on the phone. If any of you have follow-up questions and you didn't feel like satisfied with how we handled this, please call. You know, you can talk to me, you can talk to Jared, you can talk to Tyler, you can talk to anyone here. You know, we're really excited about this move, what this means for the growth of the company. And when we talk about the company, we can't do what we do without you. Like the company only exists because of the great clients that we have. And so we really, we truly want you to feel like this is an enhancement. This is a natural path that we're going to take. This is a way that we're going to continue to get better as a firm and be at the cutting edge of delivering the best advice when it comes to tax planning, when it comes to investment strategies. And these are all the things that we constantly are trying to get better at. All right, looks like I got another hand up here to see if we can get Pat on. Pat, I know
John,
you're
we
here.
did talk about this a couple of days ago. I would be interested in knowing the path of our money from the time we place it into Raymond James through your good advice, and where it ends up in terms of money coming back to us in terms of our investment quality. But also, what is the protection we as investors have every step of that way?
Okay, so good question. Maybe I'm going to answer the second question first. So one of the things that every person, every client should be concerned with when they hire any advisor, place their money with any brokerage firm, with any bank, is my money safe, right? What if something happens to the entity that holds my money? Is my money safe? So with your money being custodied at Raymond James, so remember, your money is not going to be held at Vance Wealth. It's held at Raymond James. It's still held at Raymond James. You have SIPC coverage. So it's called SIPC, SIPC coverage. And so that basically provides for if there's a firm failure, if Raymond James failed, your money is still intact. What it doesn't provide against is obviously market loss from volatility, right? So if you invest your money, the investment goes down, there's no protection for that. That's the risk that we all take when we make investments. So the protection that you have today, the protection you have when we go RIA is the same. And so there's no loss there. It maintains the same status. In terms of kind of the flow of your money, that's a little bit of a more difficult question to, I guess, answer. So, you know, when you transfer your accounts in or you write a check, it gets deposited into Raymond James. Raymond James acts as your bank, as your brokerage firm, right? So they basically facilitate what we want to do on your behalf. So when we decide we're going to buy a stock, when we're going to buy a mutual fund, we're going to buy an ETF, Raymond James acts as the brokerage firm, meaning they take your money, they transact, we buy something, they transact in it, and then they custody the assets. And so in the case of a stock, they're actually holding the stock essentially internally and as an inventory kind of on their, under their umbrella. When you buy a mutual fund, well, if we buy a mutual fund, that money actually has to leave your account and technically go to the mutual fund company because they have to invest your money. But then you own the shares of that mutual fund and it sits in your account. So I don't know if that explained kind of the progress. And then clearly, if you need money, if we're sending you a monthly check, then we take that from the cash and send it directly to you. So nothing has changed there. That's really the same across all lines, whether you're at Schwab, Fidelity, E-Trade, Raymond James, that stays the same. So that dynamic in the brokerage world really never goes away.
I have a follow-up question. How does that apply to ETFs?
It's similar to the ETF structure is going to be very similar to a mutual fund. So it's the same kind of a setup. In terms of you make the money, the ETF you make the investment, the ETF, you buy shares sit in your account. The cash technically goes to the ETF firm to manage the money to go make investments with that money. And then those investments are being regulated as well to make sure that they're pricing their securities properly on a daily basis to make sure that the investors are getting the true investment result that the investment company is making on their behalf.
My question goes a little bit beyond that, though. I understand that mutual funds charge you a load to have access to the mutual fund and have them do your investing. Whereas I understand ETFs charge a load, but it's a lesser rate than that. So therefore, are we paying a load to have the mutual fund invested, paying a lesser load to have the ETF investment, and paying you a load to manage our money? Is that the way it works?
Well, so a load is kind of it depends how you interpret that. So in the mutual fund world, a load is a commission. And in advisory accounts, and that is how it exists today, in advisory accounts under our current setup and advisory accounts under our new setup, there are no commissions. So there is no load with a mutual fund. That does not exist, because when we invest in mutual funds, we do them at what's called institutional or no load pricing. So there is no load. When you're talking about fees, when you open up an advisory account, depending on the size of your account and the relationship and the services we deliver, we agree upon an advisory fee. So that's what gets paid to us. So that's what gets paid to us as your advisor. And that's what I use to pay my salary, to pay for my team, to take care of our overhead, right? So that's kind of the understanding of the business. And then depending on where we invest, whether it's an ETF, an individual stock, or mutual funds, yes, there are some additional fees, not loads, because it's not a commission, but there are some additional fees depending on which type of account we're utilizing.
Are the fees usually less for ETFs?
They can be. So, ETFs tend to work more like index funds. So like a Vanguard ETF and a Vanguard mutual fund, I think the Vanguard mutual fund's cheaper. So not always, but they can be. And those are all things like we have a list of all of your holdings. And so we can at any time, if you're curious to know what the expense ratio of any of the internal funds are, we can provide that to you so you have a good sense. One of the things that we try to pay particular attention to is we realize when you make an investment in us, with us, and we make investments with your money, there are costs. So we need to generate a reasonable return, or a return relative to your financial goals. So when we're looking at using mutual funds, looking at ETFs, we're always looking at what we call net of fees. So we look at the results of how those funds have performed, and we're always evaluating them net of cost, because that factors into what your total return is going to be. And so sometimes we don't mind paying higher fees, because if we can get a better manager, why not? It's kind of like,
exit door open.
maybe. So I'm gonna mute you. So if you have any more questions, just jump back on. But let me finish answering this. And so I'm going to give you maybe a terrible sports analogy, but you think about a team like the Lakers. This is a team that, going back to the heyday with Phil Jackson, they invested a lot of money in management, right? They paid high salaries and they delivered really good results. So one of the things when we look at some of our mutual fund managers, some of the managers we have some higher expenses, but their results have been able to deliver above market performance. And so we don't mind paying up for some talent. We just don't want to do it without a good result. And so, though this is not like an RIA conversation today, I'm always happy to answer any of these questions, but the change of that dynamic of the mutual funds and ETFs, there's no change by us making this shift. It's maintaining it the same way. All right, Jenny, I think we're going to give you one more chance if we can get you on. Hopefully we can hear you. All right, Jenny, I think you're unmuted. Can you hear me? All right, I can't hear you still. I apologize. All right, so I got a couple other questions. So, David, the book of business you manage provoked this RIA decision. What will likely be the next step in your growth? Great question. I think honestly, the RIA decision, the Registered Investment Advisory, really is the highest standard. It's the highest fiduciary standard. If you look at a lot of these private firms that are, managing tens of billions of dollars, they are RIAs. So that's really kind of the gold standard, or I guess the platinum standard. So the RIA is really the top of this. I think where a potential next step is that, if we've identified that, some of our clients could benefit from having their assets held outside of Raymond James, like I said, like a Fidelity or Schwab, that might be a next step for us to introduce those, but only at the benefit for our clients. Because at the end of the day, our decision to say, stay at Raymond James, our decision to say, go to Fidelity, go somewhere else, we charge you an advisory fee. That doesn't change with where we go. So we just want to have the best place that provides good technology, good reporting. You feel confident as clients that your money is being safely kept by a strong financial firm. And then, but we constantly, because we, part of our methodology is we want to continually grow, we're still going to keep moving forward. But in terms of kind of this next step, this is really the final step. Unless something new is invented, the RIA is really the platinum standard for our world. So great question. Thank you. I got another question from Jim. Or I guess his first question, but another question. Exciting news. Maybe in the future, you can give us a video tour of your expanded office. That's probably a pretty good idea. So we're waiting on a little bit of technology to still be put in there, but then I'm happy to do that. We'll shoot like a quick little video. I'm hoping that, we unfortunately had to cancel our spring reception. Then we had to cancel our fall open house. Because it just didn't make sense to have everyone together given the times that we're in. But we're still planning our spring reception next year. Hopefully we'll see many of you before then, but that's a great idea. I will make sure we do a video tour. I'm not going to be in charge of that. I will have someone in the office give you a nice tour of the office. So we're really excited about it. We're really excited to have you up here so you can come see our new space. All right. So that is done with those questions. So I know most of you stuck around for this, and this, I hope this was helpful. This was not a replacement. Oh, okay, hold on here. Sorry, John, couldn't unmute. You did answer my question regarding the market, why the market is so strong. Okay, so we're good. Thanks, Jenny. So this is not designed to replace you calling us and asking questions. So we do have a lot to do. It's August 10th. We are going to have a sprint here for the next 2 months to get all the paperwork ready and move forward. We've tried to have a lot of our annual review meetings to make sure we're not getting bogged down and we can't execute on our deadline. A lot of our year-end planning meetings are going to start in October. We might sprinkle in a few in September. So be patient with us. We're here to help though. So if you're not feeling you're getting the best from us, if you're not feeling that, we're responsive, if you need any help, just know I have a great team here to take care of you. And, don't hesitate to give us feedback. That's the only way we can improve. So, thank you for going down this journey. And, it's nice to see, even David on this last call. I have many of you have been clients for over 15 years and, we appreciate, I definitely appreciate you and your family, and you guys have seen the business change and grow. And hopefully you look at all these things as positives, because that's what we do. We want to keep trying to improve. So thanks for all the support, and just know we're here to help, and I'm going to sign off. So we are done. Have a great night.